Folks, how are we doing today? I've been told I did not watch the Super game yesterday, but I've been told it did not go well for the local team.
I think you jinxed it.
Why is that? Because
You said something about the Super Game.
well, see, I've done that. I've done that in the past 2 years, and they came up victorious. So unless if I'm willing to be a jinx this year if you accept the reason for victory the previous 2 years. I'm willing to take that burden. I'd say if I have 66% win rate in Super Bowls, then anyway, so yeah, no Super Bowl parade for Kansas City. Yeah, I actually didn't watch the game, but I was listening to the game, and probably a good thing that I didn't watch the game because that was, from what I could tell, it was pretty brutal in the first half. It was a very unfortunate day. I did want to talk a little bit about Wednesday because does everybody remember we were planning on not having class last Wednesday? And we did because the FBLA competition was canceled. FBLA competition was tentatively rescheduled for this coming Wednesday, but if anybody's looking at the weather, they've already said we're not having it on Wednesday because it's supposed to snow on Wednesday. I do not know what the rescheduled date is. It's either going to be Friday here at Truman State or it's going to be Monday. And so I don't like dealing with uncertainty. I'm one of those people that doesn't like that. So I'm going to go ahead and make the following plan for this coming week. If next Monday, I'm not sure what Dr. Kading will ask because I don't even think that's going to be held here at Truman State. I think it's held somewhere else, but I'm not sure where. But as far as the next Thursday comes, we will not have class on Wednesday, partially because of that was the FBLA day we're supposed to have off, and partially because the weather is supposed to be nasty. And you can't go spreading this around to my other classes and saying Dr. Barnes is canceling our seminar class because of weather. Both of those reasons are very relevant because if you start telling them I canceling because of weather, then they're going to expect me to cancel AIS and auditing too. I'm not willing to do that. If I find out the word's got around, then not only will we have class on Wednesday, we'll have class on Thursday too. Okay. All right. And an alternate class. So we're not going to do class on Wednesday morning. If FBLA does come up and Friday and Dr. Kading would like your help, you are excused from class for the day. You will still need to make up the quiz, but you can go ahead and help out Dr. Kading for that day. Same thing for Monday. Although if it's Monday, you will need to make sure that you get your group work turned into your group leader, or if you're not a group leader, appoint somebody to be your proxy for that day. So I realize it's not a satisfactory solution, but I'm not willing to just continue readjusting the schedule to adapt to that since we've got a pretty stiff schedule moving forward. So yeah, no class Wednesday morning. Hopefully that will give us all time to recover. I expect energy levels, enthusiasm levels to just be kind of low today. And it's the past history. Although the odd thing is that when the Chiefs did win the Super Bowl the past 2 years, energy levels were still really low because everybody was so big celebrating the night before, and so. I don't know if there's a winning scenario here. Just cancel the Super Bowl altogether, maybe. Or some people say, I watch it for the commercials, Dr. Barnes. This is my only source of entertainment in my life. Yeah. I don't know. Were there any good commercials yesterday? Nobody knows. I was too busy being depressed. Yeah. All right. So no good commercials. But yeah, definitely some sadness in the room today. Some sadness. Yeah. All right, well, this will cheer you up. We're going to do test of controls. Everybody should be in a really good mood at the end of this. So this is an older case. This is actually from the Deloitte True Blood series. And you may have used these in some other accounting classes. I generally don't rely on them too much, but I really like this case. I've come to like it. I think this was the case that kind of changed my perspective on whether or not I liked controls. Because when I came here, I was like, controls are just pointless. And I grew up in the generation it's like it was all substantive procedures, and that's what we focused on. And I really got into this case, and I thought, wow, this is just a really good explanation of everything that's kind of summarized within that. So this is why I like this case, and this is actually a case called ZOU fencing. And I will admit that when I first moved here and started teaching this case, I called it ZOU fencing, and of course it's a company in Missouri, so why would it be called ZOU? It's ZOU, okay, Mizzou, okay. And so I don't know. And annual reports of the SEC, it's not that SEC actually. It's the Securities and Exchange Commission is what we're talking about. So it's a little bit confusing when we talk about Mizzou and the SEC. Anyway, it's basically a company that we're going to be doing test of controls for. And so we're going to be talking a little bit about some of the nature of controls and what we should be looking for, as well as look at some information in the PCOB literature to reinforce this. And so, it gives us a little bit of description of the background of their operations. A few of the points to note that are very important to note: they do sell freight on board, which freight on board FOB basically is a form of revenue recognition, saying that once the merchandise has left the facility owned by the company, then it's considered to be the liability of the customer, and they can recognize revenue at that point. Okay, which is an important distinction. I believe I always forget this. A freight on board is FOB. Freight on arrival, freight on destination is kind of the other one, or something along those lines. But that's basically saying that it has to reach the customer's docks before they can actually recognize the revenue. But we know this one being once it leaves the warehouse, that's when we're going to recognize revenue and recognize the sale. Materiality, not particularly relevant in this particular situation, but I'm glad they were consistent about it. And so we were talking about 3 risks associated with the revenue procedure and some controls that were related to those. So there were a few things we had to do with respect to this case. We wanted to talk a little bit about the nature of design and operating effectiveness and what the professional standards said in this area. Now, keep in mind when we talk about controls, design and operating effectiveness are 2 separate items. And that makes sense. It makes sense that they're 2 separate items, because when we think about the nature of controls, controls have to be created and then they have to operate correctly. It's not sufficient if one or the other takes place. If we have them operating effectively, but they don't exist, then that's really kind of pointless. You can't really have something operate effectively that doesn't exist. On the other hand, if you have something that exists, but people are ignoring, then that's problematic as well. So we talked a little bit about that. In fact, that's the whole focus of the System and Organization Control Reports. Remember the SOC reports? And we said SOC 1 Type 1 is just on design only. SOC 2 or SOC 1 Type 2 deals with design and operating effectiveness. And we delineated those for that particular reason. We have to evaluate those. We really haven't gone into detail about the nature of testing with respect to design and operating effectiveness. So this is going to be our first foray into that, which we already have some familiarity. Let's just go ahead and quickly run through something that we talked about back in 417. Okay, so remember 417, we talked about the types of audit evidence, and we said certain types of audit evidence can be used during certain phases of the audit. And I was very, very insistent on that. I was saying that you can use certain things during some phases and certain things during other phases. Substantive procedures, that was easy. Okay, you can use all types of evidence during some procedures. Risk assessment was pretty straightforward. That's basically preliminary information stuff that you can get very, very easily. But test of controls is always that mysterious one. Everybody always really gets confused about what you can use during test of controls. All right. So if you remember from 417, we talked about inspection, records and documents, observation, inquiry. Okay, those 3 are important because you can use them during any phase of the audit. And then we talked about reperformance. Reperformance can be used as controls. It can actually be used during substantive procedures, but very heavily used during test of controls. And then we have those mysterious things called walkthroughs, right? Those were the ones that are listed there. By the way, did I say confirmations in that? I did not have confirmations in that list, because confirmations is only occasionally used as a test of control, right? You know, Holden's shaking his head. He knows where I'm going with this. I fell for this trap too many times, Dr. Barnes. Or you didn't fall for this trap ever, did you? Yeah. Oh, okay. All right. All right. So confirmations never used as a test of control. Now, I know you could say that never is an absolute term. And you said never use absolutes. For our purposes, confirmations are going to never be used as a test of control. It's a test of account balances only and transact and controls relate to transactions and events. All right, but when do we use these with respect to design and operating effectiveness? That was the question you had to answer in part 1. So let's go ahead and take a look at the PCOB standards. And I think I gave you the instructions. I said, make sure you take a look at the auditing standard 2301, the risk of response, or audit response to the risk of material misstatement, which there's a lot of information here, but if we scroll down just a little ways, you're going to notice there's a section specifically on testing controls. And if we go down a little bit further with respect to that, it actually talks about how do we test design effectiveness, and how do we test operating effectiveness. So it might be worthwhile for us to actually look at these sections, don't you think? Because this might be something that's very relevant, how we're going to be conducting our testing before. So I want to look specifically at paragraph 20 for design effectiveness. It says the procedures the auditor performs to test design effectiveness include a mix of inquiry of appropriate personnel, observation of the company's operations, and inspection of relevant documentation. Walkthroughs that include these procedures are ordinarily sufficient to evaluate design effectiveness. So does that sound pretty consistent with what we talked about already? So we said that test of controls can include 5 different types of tests, and 4 of them are listed here. Now, what are the ones listed here? Inspection, correction, documents, observation, inquiry, which makes sense because again, those are used in every phase. That has walkthroughs listed there. Now, you will notice that one of these is not listed in this section. Which one's missing? Reperformance, okay? So would you argue that reperformance then is implied as a test of design or more as a test of operating effectiveness? Operating effectiveness because it's not here listed design, which again makes sense. Because what is the whole goal of a reperformance test? We're trying to reperform a task to make sure it's working, or in other words, it operates effectively, okay? Walkthrough, on the other hand, is listed here as kind of a test of design. It makes sense because if we're trying to understand the nature of the control, if we go from beginning to end, that would give us a good understanding of the way that the control operates. All right, let's go a little bit further. Let's go down to the section of testing operating effectiveness. Procedures auditor performs to test operating effectiveness include a mix of inquiry of appropriate personnel, observation of the company's operations, inspection of relevant documentation, and a reperformance of the control. So now we see everything here except for walkthrough, which again, if we assume that a walkthrough is to gain basically a high level understanding of the design of the control, makes sense that we would not include an operating effectiveness here. So that gives us some criteria. Now, we haven't changed any of our philosophy. The PCAOB standards have just reinforced everything that we've already known, that we have 5 types of evidence that we can collect during test of controls. But it's interesting now that we know that only certain types of evidence can be used during certain aspects of those test of controls. Now, I will be honest, I don't know how deeply the CPA exam goes and drills into this, but it's probably important to note that if we're talking about operating effectiveness and design, that we want to separate those out and delineate those particular types of tests out because that's an important oversight. That being said, this is not likely to be something that's going to be focused on very heavily in the CPA exam, simply because this is a very heavy level public company of concern, and the ACCT tends to focus on their own standards rather than public company standards. That being said, it's still worthwhile talking about. All right, so then moving forward, we're going to talk about controls. So we've got 3 revenue risks identified by the engagement team, and we're going to answer the following questions. Was the assessment of the evaluation of design of each control appropriate? Okay. So does the control identified by the team address the specific risk and material statement of the associated assertion? Was the engagement team assessment of risk associated with each control appropriate? And then was the team's interim and planned procedures to test the operating effectiveness of control appropriate considering the risk associated with control? So what we're going to do is we're going to go through each of these controls, or each of these controls that are in place. And we're going to talk really quickly about whether the risk was properly identified. First of all, whether it was specified according to the correct assertion, and whether the significance of that risk was correct. Then we're going to talk a little bit about the control itself and see if the control is correctly specified. Once we do that, we're going to talk a little bit about the design, the test of design and the test of operating effectiveness, and conclude whether or not the test of design and operating effectiveness are correct in their works. So a lot to include here. There's a lot of information in this detail, but as you kind of walk through this a few times, it becomes a lot easier to read the first few times around. Like this first time, you probably looked at it, it's like, oh my gosh, this is overwhelming. I have no idea to look at, which is kind of why last Wednesday I was kind of nudging everybody in certain directions, say, look at this piece of information, look at this. It's not that hard. You just have to know exactly where to look, which is not really fair because I had the solutions manual, so I knew exactly where. All right. But that was quite a while I was wanting to nudge you in this direction. So let's go ahead and talk really quickly about this. And I've not pulled up my team leaders here, so you have to give me a second here. Talk amongst yourselves. What's your favorite internal control? Other than segregation entities, obviously.
No. Maybe whenever you take them, like
It spreads down.
yeah, because
I will take a spicy.
Stop recording here.
It's your turn.
All right. All right, we're back. Now you can stop talking about controls and we can talk more about controls. All right. All right. So let's go ahead and start out with first control. So group 1 leader, Lotus. We have orders shipped and not recorded as revenue. And it says the relevant assertion is completeness. Does your group concur that this was a correct identification of this assertion?
Mm-hmm.
Yes, and it is, okay? Because remember, completeness is our recording assertion, and we're saying that this did not get recorded as revenue, so it did not get recorded, just full stop. Is this a significant risk for the revenue process? No, it's not. So keep in mind that it's very unlikely that we're going to be concerned about as auditors that our client is going to fail to record revenue transactions. Now, is it an operational concern? Certainly, okay. We don't want our clients to fail to do that, to record legitimate revenue transactions. But it's not something that we're going to consider as a high risk area because that's not going to be an area for material misstatement. It's just something that companies are pretty good about. If they get into the business of sales, they're not going to fail to report those sales, like most profound companies. I don't know if you're talking about mom and pop businesses and they say, oh, you wanted to buy like a piece of fudge or a pack of gum. It's like, yeah, go ahead and take it. Don't worry about it. And just walk out the door. That might happen in a smaller business, but in a large business, that's not going to happen. We're going to have strong controls over that transaction area to make sure they're good. All right, so let's go and take a look at the control. Sales are automatically recorded and invoices are automatically generated on the release of the orders to the warehouse case system, series system. Orders are not released until the goods have been confirmed for shipping the system, which occurs as the goods are scanned as they are loaded in the shipping area. So what's this basically saying here? Saying that, look, these cannot leave the warehouse until we're confirmed that this transaction has hit the system. All right. So let's move over to Tyler. What did your group say? Did you think that this control was appropriate, designed appropriately for this particular risk?
Yeah, you said it was.
Okay, yeah, I would agree with that. If we're talking about a particular concern about completeness, our concern is making sure that things get recorded that didn't actually take place. So before this leaves the warehouse, it has to be in the system. We're making sure that it gets recorded before the transaction leaves the warehouse. So I'd say that's an appropriate test that. All right. Moving down, let's go ahead and look at the design of controls. So what are we going to look at with respect to the design, and then we're going to look at the operating effectiveness. So test of design, we got based on the following factors include the control of design to address the data risk material statement, control of automation, invoicing, or control the automation of invoicing goods shipped as the system. We automatically record the revenues as shipped from warehouses, thus resulting in no shipped goods going unreported in the system that properly addresses the risk related to risk of material statement and assertion. Automated controls prevent errors from occurring as opposed to identifying them once they've occurred. So it's a preventive control. Control operates at the transaction level and thus sufficiently precise to mitigate risk. Controls perform on a continual basis and will address risk. So it's enthusiasm there. Address the risk directly and for the period under audit. And there are no historical issues of operation of control, and the control has not been modified in the period under audit. All right. So what are your thoughts here? This is kind of a trickier one. So I'm gonna stick with Tyler in this one. What's your group say with respect to the test of controls or evaluation design? You guys comfortable with this?
Yeah, but we said it wasn't the best.
I would say that these could be improved, but I did adequately. That last bullet point gives me a lot of assurance that things are probably okay. So it says there's no historical issues of operation control, and the control has not been modified in the period under audit. Okay. So what does that tell us? It tells us that it was working this way in previous periods. We looked at the control in the current period, and it's operating exactly the same way it was in previous periods. So if it's the same control, and that control was effective in previous years, what does that mean about the current year? It's working correctly, okay? So that's kind of our fundamental reasoning behind that. Now, there's other stuff that talks a little bit about it. It talks about automated control and being preventive control, which are going to be higher level details. Again, the preventive control, we're going to kind of put a lot more assurance on or reliability on because that prevents from misstatements from ever happening. Automated control is going to be significant enough because that automated control is going to operate autonomously from human being errors. And then there was a couple of things that I wanted to note. Okay, so first of all, it says control operates at the transaction level. Should that be true for most controls? I would say 99.9% of the controls we should talk about are going to operate at the transaction level. Because remember, controls are trying to mitigate misstatements from transactions and events that flow through the entity. There are controls that are at the entity level and operate more kind of at the financial reporting level. Those are very rare, few and far between. For the most part, the way we're going to characterize controls is that we're going to say they operate at the transaction level. So it's an important distinction to make. And it's going to be relevant to one of the controls we're going to look at here very shortly. And then also the controls operate on a continual basis. And so when we look at it, if we know that they're operating continuously in a certain way, then we can evaluate them in a continuous manner. And that continuous testing gives us some assurance. Now, that's going to be the test of controls for design. That was pretty easy. What are we more concerned about? We're more concerned about whether the control is operating effectively. Okay, so we're going to move down to the next step. So we have two sets of procedures. So start with the interim procedures. As this is automated control, perform a test of one follow one transaction to the system to make sure the automated control is operating effectively. What does that sound like to you all? Sounds like a walkthrough test, okay? Which is a little bit weird because we didn't identify walkthroughs as a specific test of operating effectiveness. That being said, can we say that this includes a reperformance element? Yes, so there is a reperformance element here. So even though this sounds like a walkthrough, I think there's enough reperformance that we could say, yeah, this is going to be a relevant test in that regard. In addition, we will verify our understanding through testing general IT controls, program change controls, and there have been no changes since the previous year. All right, so basically we're going to test a single transaction. We're going to reperform that transaction to make sure that it hits every single point the same way that our organization, that our client has hit. If we note any differences between the way that our transaction testing works and their transaction testing works, then we're going to say there's a problem. Now, keep in mind, this is walking through the entire system, going through the entire system and reperforming at all phases. Now, the question is one control or is one transaction enough? It is. It is. In fact, it's just distinguished in PCOB standards that if we're going to do a flow through of one transaction and controls testing, that basically will be sufficient for our purposes. All right. Doesn't sound like it because we're so used to sampling, saying we need to test 70 transactions, Dr. Martins. What's the sampling? It's like, no, one transaction because we're assuming it's operating the same way since it's an automated control. All right, automated control. Now, that being said, we have that particular transaction. Then we also have program change review to make sure that the control itself has not changed in structure, making sure that anything that could have happened to automated controls that's been documented is clear. So with respect to the interim procedures, Sydney, what did your group say? Did you think that the interim procedures were sufficient?
We said yes, but we were slightly concerned. Oh wait, but for interim?
Yeah.
Yes, because a walkthrough, or we said walkthrough, sorry. Yeah, we said.
Okay.
We're good at that.
No. Your terminology is correct. Okay. Walk through with performance elements. So we're pretty good with interim procedures. Now, roll forward procedures. Now, I didn't specifically verify this. I think I blurted it out a little bit to everybody in the other room when you guys were doing the work. What is this supposed to be? Roll forward procedures? We've heard roll forward used before, but not in this context. Yeah, year-end testing procedures. So that's what we're referring to when we talk about roll forward procedures. So we get to the year end. Our responsibility as auditors is if we tested a controlled interim, we got to make sure the control is still operating the same way at year end. All right. So they said, make inquiries to the controller and IT manager to determine if any risk or events occurred that might impact the design or operation of controls. After our interim testing date, if any significant changes are noted, retest the controls. All right. This is a tricky one. John, you get the tricky one. What do you think? What'd your group say on this one?
You said roll forwards, or these roll forwards will allow inquiry as the main source of evidence, observation of the process, inspection of related documentation, and reperformance would be more appropriately address the associated risk.
Yes, so that's the problem here is that you notice they say we're performing inquiry, and if anything comes to mind, then we'll retest the control fully. So they effectively test in the control, and my answer would be no, okay? We're not going to put a lot of stake in inquiry. We know inquiry is a very low reliability test. And if there's something that comes up that could cause chaos of the control, inquiry alone may not be sufficient to actually identify that. So probably expanding the scope of testing to identify if control changes have occurred. Regardless, maybe have at least one preliminary test of controls to make sure that it's still operating the same way. So I do not think that the roll forward procedures are sufficient, but I do think interims are sufficient. All right. So everybody feel a little bit more comfortable with that now. All right. Well, in that case, let's go ahead and do a second control. All right. So now we have one with identification of risk of misstatement being revenues recorded for orders shipped or fictitious sales, and it says occurrence, which is obviously existence occurrence. So I started with Lotus last time. I'm going to start with John this time. What's your group say with respect to the assertion being identified here? Is this appropriate identification of the assertion with respect to the risk?
We said yes, it does.
Yes, it is. Yes, I would say that does explain existence occurrence. Okay. Now it says significant risk, which implies that this is an area of emphasis for the revenue process. Is that a correct statement?
I'm not sure. Can you repeat the question?
So it says significant risk right here, okay?
Yeah.
And that implies that it's an area of prominence or an area of importance with respect to revenues. So when we say existence occurrence is a very important assertion with respect to revenues?
Yes.
It is, yes, in fact it is. So this is a correct statement. Remember, when we talk about revenues, one of our biggest concerns and one of the areas we consider a big possibility of fraud, and they identify it here, is that the client will record transactions that never took place, revenue transactions that never took place. This is a really important control, okay? This is a really important control, a very high level of concern. All right, so let's go ahead and take a look at the control itself. All right, control number 2, orders shipped and invoice report is reviewed by the warehouse director on a daily basis for unusual items and specifically for invoices recorded. Note of corresponding shipping documents evidenced by the warehouse director's initials in the report, which is maintained. All right, so what type of control is this, by the way? Is this automated or manual? This is a manual control. Does that make anybody a little bit twitchy? So we have the most important assertion area, the most important risk area in revenues, and we said, oh yeah, we've got a manual control in that area. So as auditors, are you going to be kind of like nerves racked? Yeah, a little bit nervous. It's weird. I never knew my voice did that before. Okay, yeah. Yeah, so I'd be a little bit nervous, but that's not the question here. The question is that do we think that this control addresses this particular risk and misstatement? Sydney, what do your group think? Yes, I would agree with that, okay? It's a manual control, which is a little bit dicey. Manual control, it's a bit dicey, but we do think that I think that's the case. So if that's the case, then we need to actually figure out some ways to test the control. So let's go ahead and go through the evaluation design. So we include the control of appropriate design to address risk whichever statement. Warehouse director has been employed for the company for 10 years, so reliable. Somebody work there, and in the control role for the last 5, so it's a good experience here. The director is knowledgeable. The review is directed at unusual trends and thus appropriately addresses the risk of material mistake assertion. So this first part is saying we've got somebody who has knowledge of identifying risks in this area, and that's one of the goals of this particular control. So I'd say that that probably is effective in that regard. Control is performed on a daily basis. Is this an important element of this control? This control is performed was performed periodically. Would it be as effective in design? Probably not. Again, keep in mind we're transaction level. So transaction level means operations, something that occurs very regularly within the organization. So daily basis is really important. Control identifies exceptions after they've occurred. So it's a detective control. Given the frequency of performance, it would identify errors in a timely manner. Okay. So they're saying that look, we realize this doesn't prevent things from happening, but it's frequent enough to correct things after they happen. All the control entails a review of daily revenue activities done on a transaction by transaction basis and so sufficiently precise to mitigate the risk. So it looks at every single individual transaction that occurs in the exceptions. So again, it's not every single transaction that flows to the system, but only the transactions that come up that are odd, that are on the exception report. So control involves the judgment of warehouse director since no specific threshold set. Since all transactions are evaluated with evidence in the typical business, the reporting results are predictable. All right, so a lot going on there. This is kind of a tricky question, Tyler. What does your group think with respect to whether or not the design is appropriate here?
We said it was appropriate testing multiple selections.
Yep. So I do think that even though this is a manual control, which makes me antsy, and a detective control, which also makes me antsy, that this is an appropriately tested control, or appropriate control. The tests are reasonable to set for design. Now, this is an interesting question. Would you as an auditor be comfortable if this is the only control in this area? I'm not saying is the control itself effective. That's not the question. I'm saying, would you be comfortable? I would be very uncomfortable because as a detective control, so responding to particular areas and a manual control, I wanted to have some other control that addresses the existence of revenues. But the control itself is fine. They've done a really good job of designing this control. I just don't know the control itself is sufficient. But that's not necessarily the question I ask. All right. So then we have the operating effectiveness. The operating effectiveness control will be apportioned through the entire year, and thus no roll forward procedures are needed since 3 of our selections are made in the last 2 weeks in December, and no issue knows of the selections made. They're going to talk about their selection process. Okay, so select 40 days of the year for each item, select order shipped and invoice report. inspect the evidence reviewed by the warehouse director, so make sure that the warehouse director did their job. And as to what they did to review the report, perform the warehouse director's procedures and determine if there was timely evidence reviewed by the warehouse director. All right, so 2 questions here, all right? It assesses we don't need to do roll forward procedures because this is a year-long test. It looks at sample for the entire year. So Lotus, what does your group think on that? Or what do you personally think on that? Is that a correct statement? Do they need to do roll forward procedures, or is this sufficient by itself?
It's special by itself.
I would agree with that. I would agree with that statement, okay? Keep in mind the roll forward procedures only assess if something is done at an earlier point in time and we have to make sure that we're operating later in the future. This is basically saying we're doing this at year end. And part of that procedure is going to include the period that's under testing for the near year end. So since it's the entire period, that's fine, okay? Now, what's your group say with respect to the operating effectiveness? Is the testing controls appropriate for that? Yes, okay, so they're selecting a sample out of the year, they're reviewing, they're gonna look at the documentation, and then they're reperforming those tests. The reperformance is gonna give a lot of assurance, because anytime something comes up where the reperformance is different from what the warehouse director comes up, they'll say, hey, wait a minute, we've got an exception here, and that's something we need to investigate. So I would say, yes, this is well designed all around. So again, even though I have a problem with this being a singular control in this area, and again, we're only looking at 3 controls. In the real world, we'll probably be looking at dozens of controls in this area. But if we're only looking at a single control, I'm happy with this. I'm happy with this particular one. All right. Last one. Last control. What do you guys think? So is 3 controls enough? Should I go through and make up like a dozen of controls so everybody can have fun with the controls? So I feel like that I'm just not giving you guys what the bang for your buck. You know, that when you come to this class, you're just like, Dr. Barnes, if it's fewer than 50 controls, I'm not happy. Okay. Yeah. All right. Now, I'll take that under advisement. All right. So orders shipped are not recording accurately to actual quantities shipped, and prices per invoice do not reflect approved pricing. Sydney, we'll start with you on this one. Okay. This says it's related to accuracy, which would be VAA. Is that a correct assessment? Yes, I would agree with that. And then it says significant risk is no, so they don't consider this to be a significant risk to the revenue area. What do you think? I would say it's a significant risk, but it's not going to be the same level of risk as a distance occurrence. Okay, this is something that is probably going to be less incidental to the risk of material misstatement. So, completeness would fall in the same regard. It would be an operational risk, but I don't know that it would be a risk for reporting. All right. So the control says, on a monthly basis, the reporting packages are reviewed and analyzed by the controller and presented and discussed at the operations review meeting. The controller focuses on differences or amounts greater than 4 million or fluctuations greater than 15% for the prior year or actual current budget. Controller documents the results of follow-up. All right. Tyler, I feel I've been picking on you a lot, but I'm going to continue to do it because I enjoy it. What's your group's thoughts on this control? Do you just say, wow, this control is excellent. We think this control adequately addresses this risk of material misstatement.
We say it wasn't increased.
It is not. You are correct. Why?
The inquiry wasn't. Should rely more on their inspection.
Yeah. So this is not so much an inquiry, but it's just a periodic review. Okay. All right. So let's think about something that was said earlier. So remember I said hold into memory the statement earlier that I said controls operate at the transaction level. Let's take a look at this control now. Does this control operate at the transaction level? What control does it operate at? This control operates at the balance, the reporting level, the financial accounting balance level. So think about the nature of this. All right. We're trying to make sure that each transaction has the actual quantity shipped and the prices per invoice are correct. So the numbers that they ship out, they send to the customer are the same that they bill the customer for. We can say that's probably a reasonable concern. We want to make sure that we're billing the correct amounts, the appropriate quantities, and the correct prices. All right. So what would we want to do? We'd want to make sure that we look at what was shipped and the invoices and make sure those are consistent. Is that what's being done here? Is it looking at individual transactions? No, it's looking at the overall account balances and say, hey, here's our variances from expectations. If they exceed your expectations, we need to investigate here. I'm not saying that this would not be an appropriate procedure, but it is not relevant to the risks that we've just identified. What we'd be concerned about is we'd be concerned about the transactions themselves and not the balances within those statements. Okay. So here's the good deal. Here's the good news. Okay. So here's the good news. This control right here is garbage with waste designed. We can punt the evaluation of design because we know the design is not appropriate. There's no point in us to try to evaluate the design simply because the design itself is not an issue. That being said, I did say that even if the design is not appropriate, we need to evaluate the procedures, which again would be silly to me as an auditor to be like saying, why am I testing or why am I doing the operating effectiveness? We know that the control itself is garbage. But just for posterity, let's go ahead and go through these interim procedures. So the plan to operate effectiveness testing. Again, control, not worthwhile to do this. I would not suggest doing this for any control, but I want to do it just because that's what the book says to, or the case says to do. All right. So we're assuming the design is assuming the design is correct. This is a good control. They're not, but we're going to assume it's correct. The interim procedure is saying, let's go ahead and talk to some people. Okay. When I talk to the controller, assistant controller, and get a lot of information. All right. Now that's a good first step. Can we all agree that inquiry is an appropriate first step? Is inquiry sufficient by itself? No, we know that inquiry has to be corroborated. So every single thing that's listed here, what would we want to do? We would want to obtain corroborating evidence to support each item listed here. It says inspection, so we're talking about inspection of records and documents. Obtain the meeting minutes for 2 months to determine if the monthly package is appropriately discussed. Is that an appropriate test of these 6 items that are listed up here? Or corroboration of these 6 items? No, it doesn't specifically discuss any of these items down here. It just basically says, we're getting a general understanding of detail. We're going to ask about specific information, but then we're not going to bother to test any of that information or corroborate any of that information. So everybody see the problem here? It does say inquiry. It does say inquiry. And then it says obtain corroborating information and then fails to obtain corroborating information. So you can't just take it at face value saying, okay, inquiries and there was follow-up and we're good. You have to actually understand the context of this says, all right, we just obtained the meeting minutes and we flip through those and oh, look at that. Yeah, doesn't quite work out. Doesn't quite work out. So our conclusion of plan to operating effectiveness test is down. All right, what about the roll forward procedures? Select months from Q4 and perform the above procedures as consistent with interim. All right. So we already know the stuff that interim was not good. So that's automatically a fatal flaw. But let's assume for just a second in this world, I know that we're having to make assumptions about assumptions in this one. It's really, really nauseating. But let's assume that this was sufficient. Would this roll forward procedure be an appropriate approach? So it says obtain 1 month of Q4 and then perform testing for that single month. Given this is a transactional level operation, we're concerned about transactions across the entire period. Is testing a single month going to be appropriate for this year-end test? No, we want to make sure it's operating the same way throughout the entire period. So we would want to test all 3 months of Q4 if we wanted to do that. So again, this is just devastating, okay? This should be something that you're going to go look back on and, you know, you're going to be like you're going to be unsuccessful. And 20 years from now, you're just going to be counting your millions of dollars and you're going to run across this document that says, oh, I remember this from seminar auditing class. Oh, look at this control. I can't believe I ever called it control. It's just miserable, okay? And from your knowledge, you're going to reminisce on that and say, Dr. Barnes is so wise. Yeah, that's the ultimate takeaway here. Actually, I didn't write the case, so I can't say that. But yeah, that's the ultimate takeaway here is that you should look at this with disgust because aside from the very first 2 lines or very first 3 lines, 4 lines, maybe the first 4 lines, everything else below this is garbage. Okay. That's the ultimate takeaway from that is that you want to be able to look at that and evaluate. Now, obviously you need to know why they're garbage, what it is that we come up with, but this is an example of something that is not a control and nothing that we did with respect to that was effective in that regard. Does everybody understand the logic behind it? You should be as disgusted as I am right now. In fact, between the discussion, just being more discussed between the Chiefs' performance in the Super Bowl yesterday, or the nature of this control and the testing, you should probably be more disgusted about this than the Chiefs, because the Chiefs tried their best. Okay, they tried their best. All right, we are done for today. Again, no class on Wednesday. I'll see you all on Friday for quiz, CPA stuff, and bad blood. Have a good day.